Good morning, ladies and gentlemen, and welcome to the VC Circle Consumer Investment Summit 2012. Let me first introduce you to our moderator for this panel. He is the founder and managing director of BCP Advisors, advisors to the Beacon India Private Equity Fund. Prior to that, he was managing director at private equity fund GEM India Advisors and worked with Reuters Venture Capital and Bain & Company. He currently serves on the board of Baker's Circle, Bhavana Boulders, Impresario, among multiple other companies. He also serves on the advisory board of Dawn Capital, a UK-focused VC fund. Please welcome Mr. Deepak Shahadad Puri, Managing Director, Beacon India Private Equity. Joining him is our first panelist, who is Managing Director of Infinity Cars Private Limited, exclusive dealers of Aston Martin in India. That got him into the luxury car business, and he saw that there was an appetite for performance cars in India. And here we have his dealership. Please welcome Mr. Lalit Chaudhary. Please welcome Mr. Lalit Chaudhary. Please welcome Mr. Asim Dalal, Managing Director, the Bombay Store. Please welcome Mr. Vikram Narula, Partner, India Value Fund Advisors. I now hand the floor over to Mr. Shahadad Puri, who will take us through the next 1 hour.
Good morning. Thank you very much for the introduction, and I would like to welcome all the participants and the panelists to the first panel today. The panel today is fairly short. We only have 1 hour, so what I'm going to try and do is break up the panel into 3 parts. Part 1 will be a 5-minute monologue from me, which I'll try to keep short, which tries to set the context for today's discussion. So 5 to 10 minutes for that. The bulk of the panel will be a discussion between the 4 of us, which I'll try and moderate, which will last for about 40 minutes. And I'd like to keep the last 10 or 15 minutes for questions, because at the end of the day, it's important that you guys get as much from the panel as you can. And what we've seen from past conferences such as these, it's your questions which actually drive and raise the most important discussions during the course of the day. Let's start with Lalit. Lalit runs the largest BMW dealership in Bombay. He deals with luxury brands. He deals with consumers on a day-to-day basis. Just your perspective on what's changed in terms of consumer buying habits and why you got into this segment of the consumer business.
Okay, our background is we're dealers for BMW in Mumbai and also in Indore city. We've launched Aston Martin in India a couple of years ago, and we have Mini Cooper lined up for an India launch next month. So we are operating in the luxury car space. We're focused primarily on Bombay, and we've been doing this now for the last 4 or 5 years. The biggest change in consumer behavior that's prompted us to get into the space and also see growth in the space is people's increasing propensity to spend. Just to give you some statistics, 5 years ago the whole luxury car market across India, represented solely by Mercedes back in the day, was about 1,800 cars. Today it's probably 40,000 cars, and then that's a big change in a short time period. And again, to put that in perspective, China probably retails 10 lakh cars in that segment today. So the 30,000 or 40,000 is still a small number in the larger context. So our big takeaway is that it's no longer a social stigma to spend on luxury. It's acceptable to spend on luxury, and the network effect of spending on luxury, as more people spend on these products, the more there are others wanting to spend on the same. So that's the wave of consumerism that we are trying to ride.
And as you talked about entering the consumer market, why the car market and why these brands? A lot of it has to do with personal choices and personal background, but for you in particular?
Well, of the 2 choices you gave, I just felt that we'll get a quick start if we were to ride on the back of an international brand rather than starting up trying to build our own brand. That's why talking to various manufacturers out there, BMW appeared to be as good as anyone. It's the topmost name internationally in the luxury space.
Fair enough. Let me contrast that with Aseem. Aseem runs the Bombay store, which is a retail you own your own brands. So your perspective on the consumption market and why you've decided to build your own brand and why you're moving more towards own brand versus distributing third-party products.
Yeah. Firstly, of course, the Bombay store, we now have stores in different parts of the country, and our main product portfolio, product line is more of home and home decor and gifts and artifacts and things like that. So that's what we've been doing. When we obviously started off, it was a very old company which we took over, and then we revamped it and called it the Bombay store. And the whole idea was to try and cater to the new customers, the younger customers who would relate more to the Bombay store than what we earlier were called as Bombay Swadeshi stores. And what we've done is that obviously over a period of time we've kept introducing new products, and the idea would be more and more to have proprietary designs and our own branding on products rather than selling other brands. Having said that, we do have a few brands that we sell in our store, but more and more that we expand and grow, like what we do with a lot of our stores in malls and other centers where the store sizes are not very large, we restrict ourselves to our own brands and our own products. We have launched a new brand. It's called the Elephant Company, which we've launched through our stores, and that again is trying to cater more and more to the younger customer.
I want to come back to that later on, because changing consumer behavior and being able to adapt is a key to survival. But let me just ask Vikram, India Value Fund has been actively investing in businesses for over 10 years now, and you've backed a number of consumer-facing brands from Fame Ad Labs to Radio City to Nehru Cabs, which I argue is a consumer business. What is your perspective on the consumer sector today, and how has that changed over the 12 years that you've been looking at it, at least from an investment perspective?
Deepak, as you know, like you said, we've been around for 12 years and we've backed many consumer businesses over this period. We've actually, going back to answer your question, when we got started in 1999, there were relatively few people who were interested in India-centric businesses, investing in India-centric businesses, because the theme in those days, if you recall, would be IT, BPO, go international, the Indian market is not large enough. So I think the biggest thing that has changed is from being one of the few people who thought that domestic businesses had a future. The market has actually turned around completely today, where people don't want to go after international businesses and only want to go after domestic consumption. So in a strange way, there's been a complete reversal in a very short period of time. If you really think about in 11, 12 years in the investor mindset, where domestic businesses, and honestly I think that the truth is somewhere in the middle. The domestic businesses were not so as bad businesses to invest in 1999, and the international businesses are probably not as bad as they seem sometimes today. As far as our thought process is concerned, since we like domestic businesses, we are driven by a team that is entirely Indian built, who have built many businesses in their past lives in India. We think we understand India well, so we've chosen to focus on domestic businesses then and now. But our thinking has evolved quite a bit in what we need to do and what kind of opportunities work for us in this space. And one consistent theme I would point out is that we think that there are still a lot of white spaces in the Indian consumer businesses. Though a lot of new businesses have got created over this period of time, but there's still many spaces which remain, where there's very fragmented players. And if you can build a leader, if you can either consolidate or you can, through sustained work, and there's no option to doing sustained work in the consumer space, if you can build a leadership position in a sub-segment in the consumer side, it is very value creating. It is very satisfying as an entrepreneur or as a fund that is supported or participated in that build. But even from a value creation perspective, it is incredible.
I see you started with one store in 1995, when you rebranded from the old business to Bombay store. You have 16 stores today, in more than one format. And if you think of what the next 5 years hold, how do you change your model? And how long do you, and has the last 15 years been sort of what you thought it would be, or has it been more challenging? What has the journey been like?
So I think the last few years have obviously been very, very challenging, especially, we decided to move from being a destination kind of a store and look at formats like airports, look at formats like getting into malls. So that was one big decision of getting into malls, because we just felt, is our store more like a destination store? Is the mall business really going to be good, and will it pick up, and other good developers and good mall owners are going to really run it very efficiently? So obviously the initial period, we always really asked these questions to ourselves. So anyway, just to answer his question, we're definitely looking at more stores in malls, because that will attract a lot of walk-ins, hopefully, and that reduces our effort to try and bring in more walk-ins into a destination store.
Let me just compare that with Lilith. In this 5.5 years you've started Infinity, the growth rate has been quite spectacular. And from the numbers I have here, it's every year the rate of growth, both in terms of percentage and absolute numbers, is better than the previous year. You have 3 brands. The 4th brand is coming out. As you think of building this out into a regional or national player, what is the strategy? More brands or more locations, mixture of both? And how does it work in your industry, given the high price point and the dynamics with the OEM?
Yeah, I think our situation is dramatically different from Asim's. While we're representing some of the best brands, we are also required to therefore know the strategies of these brands, and we need to carve out a roadmap for ourselves under the umbrella of what these brands have for themselves as a growth map for India. The challenge for us would be obviously to continue to keep market share within these brands as they scale up with time and reach larger volumes. That could be increasing locations within Bombay City or getting into other cities as well. But in parallel also reach out for opportunities that will allow us to broaden our representation in the automotive space beyond just the luxury and beyond just Bombay. So we would probably find ourselves in a matrix that will get us deeper into luxury, but also broader into the mass market and across the rest of the country. And all this has to be done within the purview of what is acceptable from a manufacturer standpoint.
Fair point. Now, let me change gears, and I think it would be interesting to get a luxury brand's perspective on this whole rural-urban debate. BMW, people will assume, let's start with the 2, 3, 4, 5 big cities. But having been in the business 5 or 6 years, what is your perspective on the opportunity within the urban markets and rural markets, given the sort of wealth we've seen in places like Ludhiana, Jalandhar? What's been BMW's experience?
See, we're one of the few who have a presence obviously in a metro like Bombay, and also a presence in a smaller city like Indore, which I can, in the context of luxury car space, take as a tier 3 city, which represents rural India in some ways. The brands that we deal with are aspirational, so people, regardless of where they live, have an aspiration to acquire them. Cars as a product category is something that's a necessity, so it's not only aspirational, but it's also necessary. So therefore there is a market for these products across the country. The challenge would be to time the entry into the less urban markets along with the growth of the local market opportunity there, so that you can actually make a viable business case. Getting into a market early stage, setting up huge investments and not having a market near term would result in near term suffering, which will probably question longer term commitment to the market. On the other hand, if one is patient and cautious and times the market entry well and plans the investment well, I think there is a business case in rural India or semi-urban India as well. The other point I would like to make is that yes, initially Bombay and Delhi take the lead in any of these product categories, but with time, the rest of India would eclipse the importance of these two cities as penetration rates increase across the rest of India.
Okay. But from Bombay's thought perspective, given where you are at your stage of growth, and you have to pace your growth, how important is semi-urban and rural, given your particular strategy and your product set?
So I think for us, first we need to cover all the metros. That's a given. I mean, we are at the moment concentrating more on the west and the south. So we need to first cover the other metros, then move on to the next tier. Because for us, rural definitely is not going to be something that we're going to be able to really get into. I don't see that at least in the next 5 to 7 years, unless those rural markets also really develop. And I personally don't really see that. I mean, the growth has to very clearly come out of these centers where the tier ones and the metros. So that's going to be our concentration for the next 4 to 5 years.
Vic, when you get your perspective as IVF looks at opportunities in new deals or looks at your current portfolio, how much emphasis do you put on, how do you look at this rural, semi-rural, urban, semi-urban, rural debate?
Yep. And we've had some experience in this, not directly as investors, but businesses that we own. When they think of expansion and they want to get into tier 2, tier 3 cities and how they've thought about it. If I was to point out one important learning from the experiences that we've had in this regard over the last 10, 12 years, the feeling that we get is that for the more capital intensive businesses where, for instance, if you're looking at opening your own store or you're looking at putting out some capital in each market, to get a return from a tier 2 city and a tier 3 city is significantly more difficult than you can in tier 1. So you need to therefore, if you want to go from a tier 1 to tier 2, tier 3 and forget rural for a moment, you need to tweak your model significantly. The amount of capital that you're investing, for instance, needs to be thought through carefully.
As you think of new opportunities, do you guys have a preference for focusing on businesses that will succeed in the urban market? Because some businesses are just intrinsically going to work like his dealership. It's going to be an urban market for now. Or are you guys as excited with different businesses that are primarily focusing on semi-urban and rural?
So we think about it differently. When we think about consumer businesses and when we think about white spaces in the consumers' businesses, we think the first place to start are the tier 1 towns. But when you think about, to answer your question in a very simple manner, when we think about, and we often think about consumer businesses as an opportunities to cover some of these white spaces and to build leaders in domains there which are very fragmented. There we think the low-hanging fruit, if you can call them that, are in tier 1 towns first. Okay. And those are the bigger opportunities. And over a period of time, those opportunities will of course go down.
You move it out. Okay, now let me go back to another topic which I noted initially, which is how big is a particular opportunity. We often talk about 1.2 billion people, 300 million middle class, but as you think about your business, what is the addressable market share? How relevant is something like market penetration in India vis-a-vis other countries in Asia or around the world? And how do you think about how big you can be in the next 5 years?
See, in the market that we operate, I would go back to using the term we're just scratching the surface. At 2 odd million cars, we pale in comparison to somebody like China who's doing 15, 16 million. And that country has gone from 2 million to 15, 16 million in a span of 5-7 years. So it's unclear whether India will have the same trajectory, but what is clear that with time you will need the same level of penetration rates for something as basic as an automotive product, and therefore you can say that with time you will reach that threshold. The challenge is one of traversing the path from the current scale to where the country might get to in a certain period of time, and from an entrepreneurial standpoint, building a business model that will allow one to scale through this entire period. So for us, the size of the market is never going to be a concern. It depends on how you define the market. Even if you take 2 million cars today, it's a huge market. It's a function of how much of market share or how much of size one can achieve within that overall market space, and that's the challenge for us. Market size in itself is not a challenge. It's what market share we can get. That's our challenge.
And what's your view?
Very clearly, I think the whole market is huge. I would like to talk about what we do, and if we say the three important things, which is roti, kapra or makan, the three basic requirements of people. Roti, I don't mean by food and grocery, but I think in that segment, the restaurant business is something which is going to be big in terms of convenience. Then you come to kapra. I mean, obviously we are all going to require apparels and clothing. Again, there are some models like the Zara model, which is probably done very well, or among the homegrown brands, you have Fab India being one of the brands that has really done well with apparels. And the last one is Makan. I don't mean real estate and apartments, but I'm saying with so many apartments being built, whether it's commercial or residential, everyone's going to require furnishings and everyone's going to require something to fill in. So I see a great opportunity in right from the furniture down to furnishings to home decor for different homes. And I think this is happening all across the country.
For someone in the organized space to address, what are the 2 or 3 or 4 sectors that you think you would like?
Yep. I might be stretching the definition of consumer a little bit here, but one of the sector where we have been consistently invested in the past, and we think there'll be other opportunities too, is on the healthcare services side of the business. Pure consumer, I think there are areas such as processed food, which is being very underpenetrated, and there are very good reasons why that is the case. But when one looks at the country from a 20-year horizon, I would think some of those factors would recede and would probably be an example of an area that would do well.
How do you think about e-commerce?
I think that's very clearly going to be the next big thing. We can see that happening. We are ourselves selling online in a small way, but we are doing it. What I see is very clearly our generation will definitely prefer doing the brick and mortar shopping, but the next generation is completely going to be e-commerce oriented. So I think that going forward, e-commerce being part of your channel strategy is going to be extremely important. We see that. I think for us, not only selling it in India but internationally, our product line will have to be sold online, and that's an effort, that's something we are really learning. We are brick and mortar people, we need to really understand and learn this business well. It's all about logistics, it's all about how quickly you can turn around, and that's something that we need to get it right. So we are taking some time, we just feel that the time is now. If we don't do it now, it's going to be too late, but we need to get into that very clearly.
Hi, my name is Nikunj. Actually, my question might sound a little disruptive, but certainly not meant to be disrespectful. Question goes to Vikram and Deepak. As Vikram was started, saying that, the first phase in the 1990s was where people disbelieved the Indian market. The current phase in the past 2 years has been where people believe that the Indian market has potential, but let's copy-paste a certain business model. Sure, tweak it to a certain extent to the Indian market and make it work. I mean, none of the Sensex 50 and Sensex 30 or Nifty 50 companies belong to the new age business models. Probably all of them are in the old world business models. When do you see a, an Indian homegrown brand which is an innovative business model for the world coming in that order? Thanks.
That's a difficult one. I'll be a little defensive about that in saying that I think on the consumer front, we did start a lot later than some of the economies that you're comparing India with right now. Also, consumers, and I'm talking specifically about the subject here, which is consumer businesses, depend on the size of the wallet. So that has been smaller in the Indian context. So therefore, obviously, a lot of the businesses that you see, the largest business in any subsegment in consumer that you think about will be a small fraction of what it would be in another economy, in a developed economy. And size does give you leverage. The one advantage that India, I think, does have is numbers. So we have, I think, seen innovation where people have been able to crack the concept and go deep into businesses. And the one thing that does come to mind is on the mobile space, where I think there's been innovation from a consumer perspective. The price points that you see in this country are lower than anywhere else in the world. And yet those businesses have at least historically been profitable. I know the last few years have been difficult for that industry, but they have been able to manage the trade-off between the per unit volume being small has been counteracted by the number of units being very, very large. And I think that is one of the idea that has worked. I think my own view, and working with entrepreneurs in this country for the last 12 years, I think we have large number of very high quality entrepreneurs who know their industry very well. I think it is a matter of time when we will see some brands coming out of here. I think, in spite of the constraints that this country has had, we've seen that in an area like mobile. So if you ask me, I'm hopeful.
Yeah, I agree with him. I think the point you made is most of the businesses you mentioned, whether it's Groupon or Apple, were businesses that started in markets where the domestic market was big enough, where the R&D spend was big enough, and where adoption is very quick. And I will just compare that to Airtel. Bharti is a global market leader in developing a unique business model in the mobile telephony world, which was counterintuitive to anywhere else in the world. And it is number one in its space and has been replicated by everyone else. So you've got to look at the market for what it is. I think India is some time away from having a global consumer brand. Global consumer brand also means media. The reason Microsoft and Apple and Groupon and all those fancy brands is because we are propagated with Western media. We see Western brands on a daily basis in everything we do, whether it's MTV, whether it's a sports channel. People around the world, consumers around the world, unfortunately do not have the same access to media that pumps them with Indian brands. It's going to be a long, long time before an Indian brand becomes a global consumer brand, purely because the way the media industry is structured. It's going to be, in my view, a couple of generations before we get there, but given the sheer size of our population, I think it will get there.
Are you really seeing growth in the next 5 to 7 years? What kind of growth do you see?
To answer your first question, are you happy with the work? No, not really. We should have grown much more than what we have done. That's for sure. There are no two ways about that. Going forward, definitely. I think if I'm in this business and if I'm going to continue to be in it, I think I see the potential very clearly. I'm not the guy who's really going into these numbers, 150 stores and whatever stores, if we were to set up, we've said, okay, in the next 2-3 years we should be 50 stores, and maybe, going forward another 5 or 6 years we should be 90 to 100 stores. More than the numbers, I think we really need to work on our top lines and the bottom line and see how through different channels you can expand and grow. If e-commerce can be a major part of our business, and I see that happening because you have international sites approaching us and saying that why don't you sell to the international market, because a lot of Indian products are really looked at in a positive way. So why don't you look at, so I think the opportunity from that angle is huge. I think to answer one of the earlier questions, homegrown brands going international, I think that's another area that we could look at. Yes, the European market and all those markets are slowing down, and that's a bit of a cause of concern and worry. But I think if we were to identify and look at some of the opportunities there could be a lot of things happening as well. We can't be doing everything in one go, so it has to happen in phases or over a period of time. But growth in terms of numbers, I mean, if it can't grow at 20-25% year on year, you're not going to reach anywhere. So it has to be a faster growth. The time I feel very clearly is now. I think the next 5, 6, 7 years, as we see, the penetration, disposable income, more and more awareness, media playing a role, all these things put together is definitely going to help in the growth of this business.
I think we have time for 2 more questions. Someone's got the mic, so let's start with him.
Hi, good morning. I was wondering your thoughts on what is going to be the biggest driver for consumer products and consumer services going ahead. Is it consumers' willingness to buy, or is the fact of an availability of choice that wasn't around earlier?
So what's the second part?
Willingness to buy, willingness to spend, versus availability of choice.
I'll start and I'll open it up. I think it's both. What we've seen is consumers are absolutely willing to spend. The reason inflation is where it is, there's real wage inflation, but India has a high rate of savings. And the younger generation of Indians, think about India, 65% under 35 years old, they don't have the same propensity to save, but the savings rates are still very high. They are much more confident about the future, so they're not hoarding cash for the future, and they want to spend. The question they have, or they ask themselves, is what do they spend money on? And they want to spend on every category. Overlay that with 200 channels on cable TV, and they see the Western world, they see media, think of social media. They are inundated with information. The question then becomes availability and how we provide those products to them. So I think both are critical, and I think the willingness is there. The question is, in my opinion, which entrepreneur is going to offer the right product and service at the right price point. Indians are amazingly price conscious. They are willing to spend on luxury goods. They have the capital, but they think about value for money. It might be a BMW, but it's going to be value for money, in my opinion. So I think that's the offering. That's the key. Add anything else?
I think the availability of choice is what triggers purchase decisions for sure, and then we've seen in the last several years many new products or brands come in within each product category. But again, availability of product only becomes available when there's already buying happening and people see the buying pattern supporting all of these products to coexist, all the brands to coexist. So I think it first starts with willingness to spend, which then triggers availability of brands, and then that hopefully further supports willingness to spend.
We play a game. Whoever gets a mic first and stands up can ask a question.
Well,
and stands up.
Okay. Just a couple of questions. I mean, I think it has been touched upon earlier. As Asim was saying, on international markets, consumer businesses are looking at new markets. They're looking at rural India. As opposed to a flip out and looking at international markets, are there businesses, or would it make sense for certain segments to, instead of focusing on rural markets or expanding in India, to focus pure play international as opposed to that? Are people thinking of that? Is there something that stops them, the fear of the unknown, a new market stopping them from thinking that way? Do you see people thinking that way going forward?
I give my perspective. Most Indian consumer brands who have some scale are absolutely thinking about the foreign market. But my argument has always been the Indian market is so large
You got to have a good justification to take your product and your service to a foreign market which is hyper competitive. And we look at my personal portfolio, we have Sula Wines, we have Impresario Group of Restaurants, and I sit down with both the CEOs and say, why do you want to take Sula to the US and Australia and France? There's lots of wine available. It's good quality wine abroad. I'm not saying don't do it. Why would you want to do it? Same for our restaurant business. It's a competitive market out there, and I personally believe that it's easier to address other parts of India despite the challenges than to take on the challenge of taking your product in the consumer sector abroad. But I would love to get someone else's perspective.
Sorry, if I could also draw a distinction. As you pointed out, wine and restaurants may not be the ideal product, but if it is a distinctive product in that sense,
give me an example of a product.
Largely what Bombay Stone makes, if I may say. So sorry? Largely what Bombay Stone retails.
Bombay Stones. Okay. As actually what Deepak says is so right. There's so much happening in India that we understand the Indian market much better than we understand the international market. And I think we can't have knowledge of everything that's happening all over the world, so we have to be a little more careful. Having said that, a brand like us, of course, we need to do enough in India. I think there's so much more to do here that spreading your wings and trying to do everything in one go is going to be another disaster. So going forward, if we see the opportunity and if something's going to happen, we definitely want to take it international, because one will have to be, right now India is the flavor, and how long that's going to continue internationally is a big question mark. In the sense, I'm not doubting that. What I'm saying is, how long is that going to be before something else becomes more fashionable? So till then, if the opportunity comes up and something really happens, why not? We would definitely look at that opportunity. Maybe look at a franchise model for international, not for the local but for the international, or a JV model or something like that, where we have some local participation and local knowledge and experience that comes in.
I've been given a time warning, so last question. Gentlemen.
Thank you very much. My name is Ratish. There are signs that the food industry might beat IT in the next 10 or 20 years. Today in India, the top 3 QSRs, the quick service restaurants, are American: McDonald's, Pizza Hut, and Domino's. Now, McDonald's has been here for the past 20 years. Why do you think is that no Indian brand has been able to kind of come close to these 3 major brands?
Again, I'll give you my perspective. I've been looking at this sector for, I think, over 10 years, both in India and abroad. The brands you mention are aspirational brands, and as you look at emerging markets from Latin America, Sub-Saharan Africa, Asia, as countries emerge from emerging to emerged, because of media, people have aspirations. I want to go to the US, I want to be very American, I want to do what everyone else in the world does. And it always starts with global brands which have this. My 3-year-old daughter from 1 kilometer away can see an M and say it's McDonald's. Okay, it's a 3-year-old kid. And these brands are ingrained through the programs you watch, to whatever marketing you've done, they've done a great job. And I think as we looked at Singapore and Malaysia as case studies, we've seen the global brands take quick market entry. They have the capital to develop and educate the market. McDonald's lost money for 10 years in India before it started making money. And it's only then do local brands come in. The question then becomes, will a local brand, given the fact that it's starting 10 years later, it does not have the balance sheet that the global brands do, will it come up and be able to match in terms of penetration in number of outlets that the global brands have? And that's a debate that's still ongoing. Japan, lots of domestic brands. Singapore, we've seen the emergence of strong multi-outlet domestic brands. But I think India, it's some time away. We as a fund have a preference on backing domestic brands, because I think over the very long term, if you are the number 1, number 2, or number 3 in any category in your brand, I'd rather own the brand than to be the local franchisee of a brand. But in the short term, I think there is significant value in bringing a global brand in, because you don't have to build the brand up. And look at BMW, he he doesn't have to knock on doors and say, this is a car, it's got 4 wheels, look at the braking system, because everyone knows a BMW, and it's easier to sell. I'm not taking any credit away from Lalit, but it's going to take a long time before domestic brands in any category get there.
That being said, this Cafe Coffee Day has achieved great scale, and
Cafe Coffee Day has Cafe Coffee Day is a great example, and I think it'll be interesting to see when Starbucks comes in. That's one of the few categories where, for different reasons, the global brands did not make a market entry when they did. And now that they are coming in, it'll be interesting to see what sort of penetration they will get in the marketplace. On that note, I'd like to bring the panel to an end. I'd like to thank Lalit, Vikram, and Naseem, and all the participants for your questions. Thank you very much.